Airpeace has announced a significant fare increase for its one-way flights from Lagos to Abuja, with ticket prices rising to over N200,000 starting November 1st, 2024, amid Nigeria's ongoing economic downturn. Welcome to Media Times. I am Paul Nelson. Kindly take a listen to today's podcast. Please stay tuned.
All right, folks, get this. You're planning a quick trip from Lagos to Abuja, right? And naturally, you've been keeping an eye on those flight prices, but you might want to brace yourselves because things just got interesting.
Yeah, it's a bit of a roller coaster ride in the Nigerian aviation scene these days.
We're talking about Airpeace, the big name in Nigerian airlines, suddenly jacking up their prices on the super popular Lagos-Abuja route.
It's a significant jump.
To put it mildly, it's a whopper of a price hike. We're talking over $200,000 for a one-way ticket. I mean, seriously, when I first saw these numbers, I almost choked on my coffee. So, what in the world is going on here? Why this sudden price surge? What about other airlines? Are they joining the party too? Well, you've come to the right place because today we're strapping in for a deep dive into the wild world of soaring Nigerian airfare.
It's a bit more complex than just a simple price increase. It actually speaks volumes about some pretty big challenges shaking up the entire Nigerian aviation industry. Think everything from skyrocketing operational costs to the overall economic climate in Nigeria. Yeah, it has some potentially big consequences down the line, not just for frequent flyers, but potentially for the entire country.
Absolutely. So let's peel back the layers on this one, shall we? A recent email from Airpeace, the one outlining these new prices. Well, let's just say it went viral faster than a cat video on the internet, and for good reason, too. Business class, yeah. Get ready to fork over a jaw-dropping N400,000. But hold on, because it gets even more interesting. The real kicker here is economy class Y, the go-to choice for most everyday travelers. Well, hold on to your hats because it's more than doubled.
Yeah, you're looking at a price that went from N150,100 to a staggering N300,000. It's a huge jump for sure.
Imagine planning your trip, thinking you've got it all budgeted out, and bam! Suddenly your flight costs twice as much as you expected. That's going to throw a wrench in the works for a lot of people.
And it's already happening. We're starting to see reports of passengers getting stranded, especially on major routes like Lagos-Abuja, precisely because of these inflated prices.
Right.
It's a stark reminder that this isn't just an abstract financial issue. It has real-world consequences for people who depend on air travel.
It's not just numbers on a screen. It's impacting people's lives, their travel plans, their ability to connect with family or pursue business opportunities. It's a big deal.
So with Airpeace making headlines, it begs the question, how are other Nigerian airlines responding? Are they following Airpeace's lead? Are we about to see a domino effect here? Well, let's see. Right now, Aero's fares are kind of hovering between N94,000 and N109,000 for the Lagos-Abuja route. Arik Air's coming in a bit higher, ranging from N104,405 to N139,292. And then you've got Ibom Air sitting somewhere in the middle with fares around N124,000 to N133,000 for the same route.
You're right to point out that Airpeace is definitely on the higher end of the spectrum. No kidding, right? So the question is, are they an outlier? Or are they just the first domino to fall in what could become a much larger trend in Nigerian airfare?
It's the million-naira question, isn't it? But to really understand what's going on, we need to dig a little deeper into the why behind these soaring prices. We had a chance to speak with an official from Airpeace, off the record of course, and they were adamant that this isn't just a case of airlines trying to squeeze every last naira out of passengers.
Okay, but what's the deal then?
They maintain that they are facing an uphill battle against operational costs that seem to be skyrocketing by the day, including what they call heavy government taxes. These are costs that realistically have to be absorbed somewhere, and unfortunately, more often than not, that burden gets passed down to us, the passengers.
Yeah, that's how it usually seems to work. It's a tough situation all around.
It's a domino effect, really. When one cost goes up, it tends to ripple through the system.
And, of course, we can't ignore the elephant in the room, which is the current economic situation in Nigeria. Inflation is hitting everyone hard, and now this airfare hike. For a lot of Nigerians, this could be the final straw. It could make air travel something only the wealthy can afford.
And that's where things get really interesting. Because if air travel becomes too expensive for a significant portion of the population, we're talking about potential ripple effects across the entire country. Think about it. Businesses rely on air travel. Tourism takes a hit. Even families who are spread across different states, it's going to become harder and more expensive for them to stay connected.
It's a chain reaction. It really makes you wonder about the future of air travel in Nigeria, doesn't it? Is this the new normal we have to get used to, or are we going to see some adjustments down the line?
It's going to be interesting to watch it unfold.
And then there's the question of alternatives, like what about investing in better road infrastructure or expanding the rail network? This whole air piece situation has really thrown a spotlight on some much bigger issues facing Nigeria: travel, affordability, economic stability, the works. It's a lot to unpack.
It really underscores just how interconnected everything is. When we're talking about economic instability, government policies, the aviation industry, they're all part of the same ecosystem. How this plays out in the long run, well, that's something we'll all be watching closely. It's going to be fascinating to see what solutions emerge, if any.
It's a developing story for sure. But for now, that's about all the time we have for this deep dive. We'd love to hear your thoughts on this, though. What do you think about this whole air piece situation? How do you think it will impact you, your travel plans, or even your view of the Nigerian economy? Hit us up on social media. Let's keep this conversation going because, honestly, we've only just scratched the surface here.
In another development, the federal government of Nigeria have raised N289.597 billion in its October 2024 bond auction, according to the Debt Management Office (DMO). The auction, conducted on October 21st, featured two reopened tranches of existing bonds: the 19.3% FGAPR 2029 5-year bond and the 18.5% FGF 2031 7-year bond. Kindly take a listen once more.
All right, everybody, strap in today. We are diving into some seriously interesting financial data out of Nigeria.
Hot off the press, too. We're talking about the bond auction that just wrapped up. Results were released on October 21st, 2024.
Yeah, so fresh, and the numbers are a little, well, eyebrow-raising to say the least. Luckily, we've got you here to help us unpack it all, straight from the Debt Management Office's own data, no less.
Gotta love a primary source. But yeah, I think this is one of those deep dives that'll really show people how these things, even if they sound dry, impact everyone, you know.
Oh, absolutely. We're talking inflation, interest rates, the whole shebang. But before we get ahead of ourselves, let's start with the basics. For those who might not be bond traders, what exactly is a bond auction?
Right. So imagine this. Nigeria needs cash, right?
Yeah.
Big projects, public services, the works. They could go ask a bank, BUT. They've got another option, these auctions.
So they're putting themselves out there looking for investors.
Exactly. Issuing bonds is like borrowing from, well, you, me, anyone who buys in. They promise to pay that money back over time, plus a little something extra. That's the interest.
Okay, so it's like crowdfunding, but for governments.
Yeah.
Makes sense. Now, this particular auction, it really caught my eye because they pulled in a whopping N289.597 billion.
Yeah, that's a healthy chunk of change. Analysts were predicting way less, shows there's still strong appetite for those Nigerian bonds.
Right, but here's the catch. To get those investors on board, they had to offer sweeter deals, higher interest rates than before, those marginal rates, am I right?
Oh, you are spot on. We saw some pretty substantial jumps, especially for the 5-year and 7-year bonds. Last month's rates are looking downright quaint compared to this.
So investors are hungry, but demanding a higher price for their money. That's like inflation textbook, right?
Textbook. See, inflation eats away at the value of money over time. To stay ahead, investors want higher returns. It's all about keeping pace.
So let's say you buy a bond that matures in 5 years. If inflation's running rampant, what you could buy with that money in 5 years is, well, a lot less, right?
Precisely. That higher interest rate, that's the safety net against that risk.
Okay, starting to see the whole picture now.
Mm-hmm.
But where does this leave Nigeria? They need the funding, but aren't these rising borrowing costs a slippery slope?
$1 million question. It's a tightrope walk for sure. Higher borrowing costs could mean tough choices for the government, like raising taxes or cutting back on public spending.
And that's where it hits home for the everyday person, right?
Mm-hmm.
I mean, those decisions, they have ripple effects.
Absolutely. Higher taxes, cuts to services, it all adds up. Suddenly, those bond yields aren't just abstract numbers. They're impacting your wallet.
Whoa. Okay, so this isn't some distant event. All this is unfolding right now, right? Especially with the settlement date looming, October 23rd.
No time to waste. Everything becomes very real very quickly. Those financial transactions, they're not just entries on a balance sheet anymore.
This has been eye-opening. I feel like we often hear about these economic indicators, but seeing it play out like this through a single bond auction, it really brings it to life.
That's the thing about finance. It's all connected, like that butterfly effect, you know?
Exactly. So as we wrap up here, what's your takeaway for our listeners? What are the potential long-term implications, not just in Nigeria, but globally?
Keep an eye on the international reaction. Nigeria's higher rates, it's a signal, right? Other emerging markets, they're watching closely. Could be a sign of things to come.
And if those rates start climbing globally?
Domino effect. Stock prices, mortgages, everything's on the table. It's all interconnected. Something to ponder, for sure.
Absolutely fascinating. A huge thank you for breaking this all down. Until next time, everyone, keep learning.
Always a pleasure.
Thank you so much for listening to this episode of the podcast. Your support means a lot, and we hope you found the content valuable and insightful. If you enjoyed today's discussion and want to stay updated on more topics like this, don't forget to subscribe to the podcast. By subscribing, you'll be the first to know when new episodes drop, filled with more tips, advice, and stories to help you on your journey. Thanks again for tuning in, and we can't wait to have you with us next time.